Hello, hello, good morning. Welcome to another ES Futures trading stream. Finally, the end of the week is here. The first number, CPI, is here. My bad. Oh boy, what the heck happened here? No, we are 30 seconds before the opening. Okay, let's move this out of the way. These kind of openings for me are one of the trickiest ones. Because we have a spike. We have a spike in the overnight. And the market is opening at the center of the spike, as you can see. You know, the spike, this is a spike. This is the spike. This is a spike that you have here. And the market is opening right there. It is opening right at around the potential target. Remember we have this area here that was the ultimate destination of this move, to remove all of these stops here. If there is something serious here to the upside, there will be something. Oh, look at this. Look at this, what this market is opening here. Huh. Open and selling right away. How much volume? Oh, really low volume. I am checking these volumes here. This is what I like better. This is a volume, ES volume, right? I like this kind of shape rather than this because I can see better here. I can compare just, I can see better here. I can see, for example, yesterday was a big decline in the second period. But it's not printing here right now. This one is starting to build, but this one is not. I will need to check what's going on there. Now, if the gap is going to be closed, usually, and the gap is down here. Usually the volume comes right away, but you can see, right? It's not having it here. Now I'm going to close this profile. I'm going to close. You know what? I'm going to move this DOM to the side. It is on the side. It's taking. It's distracting me here. Right? I'm going to move this ones also. Let me put it here. All right. This can be an opportunity to buy actually, but there's a seems like there's going to be a lot of things here. I may have missed my chance here. It's coming right to this high here. This gap has not been closed by any means, huh? It's coming to the pullback. Is it? Yeah, to the pullback of the last period of the overnight. You have volume. That is right there where volume is. What I am. Okay. If you weren't doing the overnight, this is. I will talk about this later. But just let's keep watching this market here. Let's keep watching this market here. Seems like, as I say, this kind of openings, man, really can hurt. Because there is no definitive acceptance shown by the market, but there's no rejection either, right? A rejection of the spike, high price, will be the market opening below this, back inside this area, right? And acceptance, we see the market opening above this spike in this area here, right? Not at center, right at center. To me, this looks more like a stop hunting here. The market is dealing with these stops here. Also, this is the markets always like to inflict the most possible pain, the maximum pain on whoever has the opposite trade to what the market is doing, and that would be, you can imagine here, we have this charts from, all of these shorts here could be just now throwing the towel here. But the market has, how you deal with the short? You buy, right? You buy. How you deal with these stops that you have here? Now, what are these stops? There's buying as well. There's a lot of buying. This spike, if there is anything of significance to the upside, the market may retrace here, but it will find itself building its way higher, building value here and moving higher from this area. And many times traders will just find, will find themselves trapped by all the emotions that this kind of markets may have. Like this one, thinking that we can trade this kind of volatility or this kind of spikes that like the one we have is it's a pipe dream. You got to be patient here. Let the market settle. I let the market settle and see what it does. After all, this is a spike. This now is in the area. It has a really low volume here. Let's check this one. Again, high volume here. Couldn't get lower. There's volume building up here. This seems to be an area where the market went too high. Oh boy, look at this. 6630. Gosh, man. 6630. Right here. Huh. 6630, 6626. this area is having huge pressure here, and also is having big blocks here. Now the next thing, volume needs to come. Okay, volume, we need to see volume here coming. Building with volume, I mean above, above 10,000 here. About 4 digits, 5 digit volumes here. This unfinished auction, it is my belief that this one has been dealt now. The same way how the unfinished auction here to the downside was dealt the next day. Right? It seems to me like that has happened already here now. So this one is not a reference anymore. Has been dealt with. Now we have a gap. The main thing is a gap. Overlying inventory is 100% long. No, it's a gap. Of course, it's 100% long. Look at that. Load of emotions here. Now, since I got this account, this new one, I just, for disclosure, let me tell you something. That what I'm going to do here. My position, I'm going to take this MES and MEQ if there is anything there, and my maximum size is 5 minutes, or it's going to be 5 minutes. Wait a minute, what do we have this here? Oh, one. Show fields, show trade lines, cancel. How do I erase this? I don't want to have this crap here. Trade mode. Oh, okay. Alright, that's better. Alright, this is let me build here oh, I have it here, right here. MES. Okay, I have this MNQ, MES, settings, limit order, left click, off-step order, everything is left click. You want to double check this. I don't want to make mistakes. This one, double click. Now, this is the thing, right? If I have my position, if I have 5 as my maximum position here, just look at this, man. Look at this. This is this dome. Look at what we have here. Come on, man. I don't know if this is normal for Nasdaq, but this kind of is just too much, man. This market is crazy now. For the years, is crazy. I have that on the side. Anything that I place here will be reflected in these charts here. What the heck is this? I don't want to have this. How can I erase that? Oh, okay, that's better. I want to look at that. All right. Any position that I put there will be reflected here. You know, as I guess my maximum size. Let's put this clear here. All right. How I will treat this. My maximum size is 5 for both. Here, this is the ES, is the one on the right, and Nasdaq is the one on the left. Maximum size. I will start 2, 2 on each one. No, I mean both are the same, okay? Both are the same. 2 and the maximum size is 5. If of course these are micros, right? If I find myself trading, minis, meaning the ES here, instead of micros, okay, instead of micros, and if I find myself trading one contract here, that would be double. I will be doubling my size here. Right? This is going 2 times this size. Why? I will do that. I must have a really good reason to do that. What happens to my risk if I do that? Now, if this is my maximum size, which is half of this one, so one movement, one handle will mean half point. Half point will be $25, for example. If I go or find myself trading 2 contracts here, all right, how many times my normal size is? Those are the kind of things that I have to have clear before, right? Before entering anything, right? And if I do that, that would be, I will be trading on a wimp, and doing that is it's just a recipe for disaster, man. They got to be very careful, very, very, very careful, right? And if, for example, I trade one here, this is my normal size. I trade only one lot, for example, one micro, right? And from one moment to another, I see, okay, this is good. This market is going to do something. I am 100% convinced. Instead of trading one micro, I trade one mini. Come on, man, this is increasing my size. I'm going from 1 to 10 times this amount. Why you do that? Right? Is your risk also going 10 times higher? If my risk is not going to 10 times higher, if my risk is remaining the same, I may hear, I would like to hear myself. And I better hear myself explaining why, how come that's possible. All right, the CPI was a good number relative to the expectations, but it's a bad number overall. The number doesn't matter. What matters is what the market does with the number. I am not liking this. Really. I am not seeing volume here coming. This upside seems to be more product short covering than just look at the volume here, right? Look at the volume. I don't know if you can see that, but volume is, if we are half into the period, volume is half of what was yesterday, or the first period of yesterday. Now, usually the biggest chunk of the volume of the first period, of the opening period, comes in the first half of the period. So if I see something like, if I see matching yesterday, well, I may have something there. Otherwise, I may even expect lower. I may see even lower volume. But that's just only one variable, right? One piece of information. All indices are higher. All indices are making all-time highs. So don't fight a market that is doing all-time highs. Just as simple as that. So why am we short in this market? No? And why I'm not in here is because I am still observing yesterday, following up the whole week. Actually, I got this would be 1, 2, 3, 4. This would be the 5th day. This is the end of the week. There's a breakout of this range. There's taking the all-time highs. We have a high. Well, have an all-time high that has been made during the overnight, right? And Um, I see this as the ultimate destination of this movement that I started here during this day. All right, unfinished action here. The all-time high has been taken. My trade yesterday was aiming to take this high, maybe with a little spike somewhere in between. It didn't develop, right? And the key piece of information for today is, or was, this liquidation here. What happened here took care of the laggards that came. Remember when we talk about what the stage of the trade or the movement I may have been on here, right? I'm going to equate that, I don't know if that's the word. This is innovators, laggards, what's this? Early majority here, late majority here, right? I thought I was somewhere between indies and laggards, maybe in this area. Kind of like very dangerous, right? The risk was high. The best thing I could happen was have here, but the innovators were way below this day here, right? This could have been. Now I never know that until after the fact. That is something that we also talk right now. This part now, this was late majority here, and this what is happening right now. How can very well consider the late stage of this trade, right? That have started with an overnight here, the big overnight here, being between these 2 days. That was rejected. I don't know. I don't remember. It may be here or here. It was one of these days. It was here or here, right? This is when I was rejected, and this is the culmination of that. First, there's a breakout of the inside bar, breakout the 5-day range, now breakout the all-time high, right? Everything is linked together here. Now, at the time, a couple days ago we were talking about this very visible reference when the market was breaking out through this all time, this 5-day range. If the market is just, bouncing back and forth from this reference here, this is actually weak, right? It's not as strong. You better be long here, right? But something that not many people will capture would have seen, the support resistance actually was here around the 66 area here, right? Market just traded back and forth through that build. Notice how volume starts to build here, hops up some back up here. It doesn't check this one out, right? This push it lower. It doesn't check this one out because this was news, this was news, this was news, right? Each one less and less and less and less. The effect of that. Now there is something that can come from the White House this morning, regarding trade with Canada as well. Guess what the market did regarding that? Nothing. It just didn't care. You may not have even heard about that, right? And now we are dealing with this thing. If there is something serious, the market will find a foothold in this area, and all of the people that closed or hedged below this high here, right, below this high, now may re-enter when they see the market going higher uphill. But it takes time, right? It takes time to do that. I don't expect that to happen kind of like right away. After all, the biggest chunk, the biggest tech reports are coming next week. We have BMC, we have Chairman Powell press conference next week as well, and the market needs some room, both in the upper side and the lower side, to do the thing. It's thing that I always do. It always do. This have this the big swings to the upside, to the downside when we have this kind of things. And also we have PCE. I think I'm not sure if we're going to have PCE by Friday, but they got to be watching that as well. The way how this is forming is not, as I say, this is one of the trickiest openings to me. This low here, this low is very, very questionable. Yeah, I'm going to, is this the one? Yeah, this is the one. This is very questionable low, man. Very questionable low at POC, overnight, POC, halfback, overnight POC. There's a bunch of references gathered here. You got this halfback of this day. It's right there to the tick. You have POC right there to the tick. If you can check your overnight session, it is POC as well, around the same area. Got to face this market. It's really hard. It's really hard to sit here and not do anything just because when it opened, right? It is true. It has opened with a gap. When I see a market opening with a gap, the most likely trade I would take is to in the direction of the gap. That's one thing, right? But this gap is different. It has some things there, some kind of conditions, right? There are some nuances that are have changed, right? And based also in what has happened to me in all this time. These kind of openings are, for me at least, were crushing, man. Soul crushing many times. You gotta have patience here. When I saw the market building something here, something like this, reds here, down here, and started moving, I was checking this, I'm still moving higher. I say, because maybe I may have missed my chance. Yeah. Okay. Now, regarding I want to talk about something else here. Regarding yesterday, I placed a trade here, right? What I'm going to say is very common, and it's also a way to disregard the losses and not to have a proper approach to trading. I may say, oh, I was right? Now the market is up here. Of course, as I say, hindsight is easier. I got the market up here, and I got market here. I can say, oh, I was right? I was right. I just my timing wasn't good. No, I wasn't right. No, I was wrong here. When I got this trade, I believe I got lucky here to not basically to have a break-even trade. But the thing when we place a trade, or when I place a trade, is always have to monitor what the market is doing, if I have risk, reward ratio, right? My risk is a dynamic variable here. It's not constant. This changes too. Okay. When I had here at the time, I consider my risk being one to one. No, up here, kind of like up here. Wait, no, down here, kind of like around this level. When the market was breaking this, right? My risk was this low, this market closing, getting close to this low, right? And the potential was fixing this unfinished action, and maybe targeting this, and the best case scenario coming all the way up to here, right? So my risk basically was one to one here. You know, this one to this one is almost one to one. But it changes as the period develop. Well, we have this period, we have the next one, we have the next one coming. My risk increased actually, right? Because I don't see risk in terms of in dollar terms. I don't see $25 or $50 or $100 or two or whatever number this dollar is. I don't see risk that way, right? I see this as a changing variable. As the market developed, as the market stalled, as the market didn't have, as the trade didn't work, didn't start developing, right, in the way I believe what it would have to develop, you know, I have seen this risk, right, increasing. It don't remain constant. At the one moment in time, I said, okay, this is my position, this is my entry right here. The market was down here, you know, I was underwater here. And I said, you know, I have made the decision that if the market, okay, look at this, well, this is coming here. Michigan sentiment, consumer sentiment. Let's see what how the market deals with that news. I said, if the market gives me a chance, I will move my stop from here, from down here to this area. It doesn't matter if it is a couple ticks, but I will do that. Right? That's what I did. Because I saw risk going high, increasing. Okay, this area is being checked now. Let's start building something here. Let's start building something. I will keep adding here as long as this area is not taken. Because I see some actually volume has it is a little bit higher actually. Market overall is almost flat. I've seen some accumulation here. This is 11,000 here. This in this area here. The next thing that needs to happen is this high has to be taken. Okay, if this high is taken, I may add more if this low here holds. Now let's put the stop. Let's put the stop. That's 24. Let's put the stop here. It's 23 actually. 23. This 23. No, is yeah. The next thing is 23 is the opening. No, 23. Okay, 23. Where is home market here? This is a market. This is the opening. Okay, this is the opening here. There needs to be something here to the upside. This high has to be taken, and this one here, and we see the spike here. Because this is the area where this big volume came as well. Oh, that's hard back too. I don't see this. I don't see it right here. Why I don't see it here? Should I here? Okay, right there. Okay, there is some flushes that are happening when the market reaches up here. It seems like there is some, I can see some selling waiting there. All right. That high has been taken. You know, I don't want to see two ticks here. I don't want to see two ticks and flushing. That wouldn't be good. That would not be good. Right now that has not happened. We'd create the conditions to add if the market has a little pullback here. Seven minutes. If there is something here, if this is a strong market, there will be some upside within the first 7 minutes of the period. Now, you might say, oh boy, you are just doing one contract, one micro here. Why don't you trade mini? Because to be realistic, even though this is a demo account, it doesn't mean I'm going to trade different, right? It is easy to trade minis. Oh, because it's paper money, it doesn't count, blah, 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 blah. But the thing is, if this was real money, okay, if this was real, would you be able to do that? To hold only one position, one mini, okay, going against you, 4, 5, 6 points, right? It is just you have to, or we have to adapt to whatever our conditions are. Doing that for a stream or for a demo account, even if I don't have a screen, if I do it for a paper account, that would be my really, that would be my ego, playing for my ego there. This thing, man. I don't like this. It's just taking too much time, man. It's just taking too much time. Why? It's taking too much time. It's very uncomfortable, man. Even if it is one micro, it doesn't. It's not working. It's not creating the conditions to add, for example, or to make some sort of adjustment. I've seen some sharp movements to the downside. It didn't have developed. It didn't develop. One other, let me explain something. Let's see over and over here as well. And this is part of the business, right? It is really hard to do it without, if you have only, you have to stick to your plan, if you have candlesticks, or if you have bar charts, right? You don't see this volume. You just have this. You may see volume down here, not? But this volume down here doesn't show you where the volume comes. I can see, for example, volume coming here. Right? This is a huge spike. I have a huge spike here. This market is not having acceptance, by the way. This market has huge spike here, and volume comes down here. Right? As I say, this kind are very, very tricky, very tricky developments, very tricky openings. Okay, you're having something here. We may have something to the downside. All right, but I don't want it to come further or below this area. Maybe buying here, 21. Okay. If this holds, the best thing that can happen is that this holds, because there's potential to the upside here yet. Now you can see how it forms here. Many times you see this thing going higher, building value here, took right away. Have a lot of volume here, and then keeps going. My bad. And then keeps going higher, builds more value here, keeps going higher. That's strong. That's a strong sign. This one, I would say this is neutral. The worst thing that can happen is when the market goes this way, pulls back after a lot of wise, pulls back, build the value here, keeps going lower, build the value, keeps going lower, build the value here, and opening down here. That is the weakest ones. But you cannot see that if you don't have if you don't have histograms. It's really hard to see that. How do you see that in this bar chart, for example? Or how do you see that if you have a candlestick. That's when the patterns start to play an important role. Oh, market opens, if it doesn't take the opening here, oh, this is a stop. I don't know about those ones. I actually forgot about those kind of things. I don't trade that way. But that's just me, right? That is just me. I don't like this, man. I really don't. I really don't. If this high is taken like quickly, followed by this all-time highs quickly, I want to see the market maker stand here in this area, right about this one. If that doesn't happen, there is a risk that this market may try to find some buyers below this area here. Based on that, and because I am trading right now, I'm not using options. This is just one micro lot I haven't added yet. And based on that, on what we have next week as well, I have adjusted the stop here. I see the market stalling here. Now it is true that has potential, that have upside potential here. No, but I'm going to exit here. Too much time has happened. I don't like this. I will wait. If the market comes down here, I may actually have something here, maybe in this area here now. If it does. If it goes without me, so what? A slight increase. A volume. Market overall. Oh, market overall is just right there. It's pretty much matching yesterday's. Seems like this market doesn't have conviction right now. The idea behind all this thing is the original idea that these levels at which this market is looks like more like is or was the ultimate destination of something that has started here in this day, like a couple days ago. Again, the key yesterday or before yesterday, we have a reference like a late rally high. If there's something on that, the market will build value about that, which it did. Now we have pullback at the closing. If there is something serious relative to this, we would have seen the market opening below this, right? Which would put the market in an area where advertises where chop and rotation, also chop and rotation were high here, this one, this area, right? But if the sign that this was liquidation, the odds that were liquidation here were high because we have these developments coming, K coming from J halfback, J coming from I halfback, I coming from H halfback, right? And the correction that happened didn't even took this one, right? So there's still here some, all of this weakness started here at this area, but most of that, right? Most of that has been rebalanced, right? And what we have left is, just a regular market, right? With nothing on that. And notice where this market opens, way above the late pullback low. And why I call it pullback low? Because it is coming. It is a rally. It is a rally. It's a late rally that we have. I think this is where my original entry was. Yeah. Just coming back to that. This may come. There are good odds. But the odds that this is the daily high are low, are not that good. But I am not seeing the confidence. It seems like a broken disc here. These kind of openings are the trickiest ones for me, at least. If you have any questions or comments, please let me know. Look at the first period in Nasdaq. Right? Full of white. There is no conviction here in this market. Now the second period is building. Oh, wait a minute. This is second period? Yeah, this is the second period, right? Is it? Yeah, it is. This is the first period. Absolutely white here. Notice what we have below. I hope you can see this. But look at what there is nothing here, right? It is not weird or strange or unusual that this kind of movements have the tendency to come back and fill these areas here. Right? I haven't seen this actually in a while. This is really there was nothing here. Right? There was no depth in this market. Look at this as well. Look at the years, man. Look at this. Ones, single digits numbers until it comes down here. God. This one looks more like a... Oh, there is something else as well here, right? There is something else. Let me see how long can I minimize. That's too much. Okay. This thing, right? And you see this all the time as well. Guess what traders would have been doing when they saw the market having a big break in the overnight here. A big break down here as well. Another one down here. The only thing... No, here. This is not my bad. This is not. It was this one, right? It was this one, I think, or this one, or here. One of these days here. I guess I have a significant downside during the overnight session here, coming lower. I'm not looking at this. No, these are not even the real ones. Guess what these traders will be doing? Probably doing, As long as the market closes below this, probably they will have been selling naked puts here, right? And to keep the premium, the only thing needs to happen is the market close below this. And when they do that, they sell. They are not going to sell one contract, one lot, one contract lot. to have any gains. Usually retail only small trades will be selling 20, 30, 50 contracts, right? To capture like maybe 10 bucks or 20 bucks per contract. Now this is tremendous exposure that they have. Tremendous risk, right? Oh, that may be something that could happen here today. All right. It's back to. It's even a little bit lower than my entry original. No, and this is the thing. I need to stop talking about that. I need to stop talking like that. That trade is gone, and I need to reset here. But if the market comes down here to this area, probably will. I want to see where this market opens. How close opens to the high, how to the low here. This could give us a good entry actually. The closer it opens to the low, it would be really good if that low holds. Right? If it opens 2 ticks from the low, it won't be that good. But it opens kind of like around this area, start moving lower, and just cannot take this low. That is a good. That can be a good entry. If this low is taken, I'm talking about next period, right? If this low is taken, now we have a rotational day. I was listening to my own stream yesterday, in the afternoon or the evening, I believe. For disclosure, also, need to say that I am dyslexic. I have noticed that how deep I into that. I don't think I am that deep into the spectrum of dyslexia, because I hear myself when I hear the streams. I hear myself saying, for example, this is when I got a put, for example. This is a put, or when I got a call. I said, wait a minute, I didn't say that. Well, that's what my brain thinks. So I didn't say that. But how can I not say that if that is what I am listening? Right? Which is kind of crazy. So that show cast how where my level of dyslexia is, right? Because I wasn't thinking that, but I say that, and that happens. That usually is. I better say that is not an unusual thing, right? I may be pointing, doing arrows, and say this upside, and I say this downside, things like that. All right. This market may have gone too high to find buyers. There is some. Can you see the stops that are here? Oh, let me talk about the overnight. This could have been a good trade if you were awake. Can you see these highs here, right? Based on what happened yesterday, this was just long liquidation, man. This was long liquidation. right? And having this kind of tops, you can see you can see traders, you can see short-term traders shorting. Oh, the market is going lower, shorting here, and this could have been an opportunity here, right? Just aiming to take this high and maybe this high as well. But when you see the same thing developing over and over and over and over again, now you can see who is short in this market, right? We have said several times, man, you got to be, why are you short in this market? That's what I say we talked about yesterday. Why are you short in this market? I guess it was the same thing this day. I don't remember. This is not doing the opposite thing that the market is doing. And that's why it's important to have perspective, to check different time frames, right? Have an appreciation of what the market is doing in general, right? What the daily time frame, the weekly, the monthly time frames, what the other indices are doing as well. How is Nasdaq, for example? How is the Dow, even the Russell, right? Check those things. Now this market is opening really close to the low. I'm going to show you, for example, what do I have in my charts to observe just after. Let's see if there is something here. And I guess I am looking for a trade here. Yesterday this high wasn't good, but this low wasn't good either. No. The low wasn't good. The low was actually, the low is really bad, and this one, but the top, the high wasn't good either. This is fire crack potential, fire crack effect potential here. Remember this, all of this line. Can I draw a line here? Oh no. It's a weird thing that this chart doesn't. Now we have rotation here. Now we have rotation here. Play. I don't wanna. Now we have rotation. Line, ray. Starting here. Actually, from here all the way up to this area here. So that will be here. How can I solid extend right? No, I don't want to extend right. Woohoo! We got it right there. Okay, I'm going to call that here. Yeah, let's save it. Configuration 1, TC1. This would be segment, right? Name segment. Man, this is all the good things that Sierra chart has. Save, alright, save it. Apply all. Okay, so now my. Oh, what the heck? Anyway, still I have to go here. Come. What hasn't changed? What's wrong here? Oh. No. Let's do this smaller. What about? No. What about 1? There you go. That's much better. I think that's better. Oh, load only. I don't want load only. Save. Save exit for you. Okay. Alright, let's do it now. Play. Still? Come on, man. segment, save existing. God damn it. Oh no. Okay, I'll work with this later. Now we have a rotation here. We have rotation to the downside. Maybe we have a rotation in the market. No rotation to the downside. As a matter of fact, let's do it two. So I still can't see. This is gone. This is low. This low is kind of a little bit questionable here. Standard profile. Let's see how far this rotation goes, right? Like as I say, we got rotation early in the session, you know. This is giving us some clues that we may have a rotational day here, right? And this could, and the potential for the day now is I will start look to value, what happens to value. Since we have rotation, now we have value, now we have POC. The direction of the trade, I will try to place my trades to the upside because value is higher. Obviously, we have a big gap, right? Our value is going to be higher. Yeah, something extraordinary has to happen to value to move to push value lower, or at least inside this day here. What are the odds the market moving value down here, right? Especially if there is a rotation. So I expect to see some rotation here. This may be this market developing lower, trying to close this gap, and if there is any sign that the market start to stall, that might be potential for some entry, okay? But again, remember what we have next week. Llama la puerta. I have a problem with this chart here. Oh yeah, I talked about that already. Where is this? Oh, here. I thought I got it here, but as you can see, the first period is lower. 300,000. The second period has already printed. We are in the third period, but this one is not showing. It's just showing the first period. I don't like that. No, this is worthless. Notice here how value or volume. I expected higher volume for this period, but notice what's happening now. It's coming lower. another 7 minutes. So I need to check this one. I need to do something in that regard. Oh, I said I was going to show all the charts, all the configurations that I have here, just so you can have an idea what I check. While I trade mostly the ES, 95% of my trades are on the ES. Look at this. This is an unfinished action here. This is an unfinished action down here as well. We may have an excess here actually on the lower side. This is the 30. It happens to be the 30 level, this one here. Actually, you know what? Let's. Oh come on, let's get some. Oh come on, what is it? What happened? Oh, I said I was thinking to get something here. Okay, if there is a push to the downside from here, I want to see how close it gets to this low here. Oh, okay. I keep forgetting about this. This, for example, are charts that I have available. Oh, but this high is no good. This high is no good. I got to be crazy to short this market. All right. You know, in this chart, what I have here is crude oil. I have the dollar. I have gold. I have the 10-year bonds, and I have the 30. The same charts, and just the daily here. The same charts, but in intraday, 30 minutes bar charts is the next one. I do have configurations to see monthly, weekly, and daily for the ES, and I can use these charts for all. For example, if I want to check, the ES sectors, for example, right? Or if I wanna, I got my watch list here. For example, let's bring the sectors. Let's bring some ETFs here. Let's bring stocks. Did I have a stock? Yeah, let's bring stocks here as well. Look at that. Look at that, man. Look at that. Look at this market. The first dip is being bought. it seems that this high, if this period takes this high out, there's more rotation here as well. That would make this period a deep buy. Oh, as I say, let's keep talking about this. The same charts I can use, the same configurations are for stocks, ETFs, where you can see what's happening in those areas, right? I have a monthly by itself, same weekly. I can, if I need to have more. And this is not. I will not. Oh, look at that! Look, this is the daily. This actually was a good sale. Come on. I was doing this yesterday. Oh man, wait a minute. I said, wait a minute, what the heck is this? I put just a trend line here and look at where it was sold. Look at where this high is. Right here. Very systematic selling. Right? What would you sell from that area? If something happens here next week, you will see maybe market developing from this. If this area holds, right, developing either selling from that or buying from that. If you have back and forth, still, I'm not saying that's going to happen, right? But what the market does, or what the market will do, is what will give validity to this thing, right? The market doesn't give crap about where I place my lines, man. I will keep saying I have the daily. This is something interesting. This is the adjusted. This is for indices, because these are contracts that renew every 3 months. The non-adjusted contract is here. You will see when the contracts are rolled, you will see big gaps always. Big gaps, because the new contract almost always have higher prices. That adjustment is reflected in this chart. It's still a yes, but this is an adjusted chart. We have to consider those rollovers and have a better. You can see the contract here, for example, right? It's adjusted. It adjusts the new one to the old one. And this one, the last one, is the current contract. This is December contract. This is December, right here. Oh, you can see it buying, right? They adjusted from these three. These two have more validity than this one. If I want to check moving averages, I will be checking either more likely this or this one as well. Here, in the adjusters, you can have a better look at what is below. This one doesn't have too much light. This part, for example, is just the chunk of the volume started to come down here. Right? These bars here may have 20 contracts overall, right? And right here maybe 1, 10, or 200, something in these areas here. And I use this for, what I do is I use this for the indices, right? Indices to do the same. I got, for example, NASDAQ. Wait a minute, what happened here? I need to link this one to Lilith, okay? I have NASDAQ, the Dow, Russell. You want to trade, you have the VIX, but the VIX doesn't matter. I got the, here's the 10-year. Here's the 30-year bonds. This is the dollar. This is some ETFs, the big tech ETFs here. This one is a relationship between. This is when the market starts to hedge. I can see hedging, for example, going on here. How hard, how intense the hedging is, right? when this is in the lower side here, the market is fearless. Usually VIX is lower. Right? And there can be, depending on the formation that we have, there can be big risks actually, but you can see, sometimes you will see there's another correlance. This don't relate to the actual risk the market has. Right? And trading or the market becomes complacent. Right? You can check the VIX for that effect also. And this is for trading. You have the Dow Jones. This is the SPY. This is some ETFs here, right? Crude oil, another commodities as well. This is copper, this is gold, the same. You know, you got the idea, right? Checking all those things, right? Checking all those things. Now, this is a chart that actually doesn't have too much relevance. But this is the same. What I have here is 30-minute period, but with volume profile here. That would be the equivalent of having the market profile expanded here. Right? So I can just get rid of this chart, for example, and just keep this one. So if I need to add a change some chart, I will do that. I can get rid of this one, for example. Huh? The next thing I have is just a comparison between the adjusted and the non-adjusted. Sometimes it's useful. I haven't used this in the past 3-4 months, maybe more. This is the major indices side by side daily. Major indices side by side in intraday. The same kind of, okay. This for me was, I can get rid of these charts as well, right? But I like to have it easily really accessible for all these indices, you know, the Russell, the Dow, instead of having here and changing it here. For example, I have it here, and I change, what is my indices? I have it, okay, let me, where the heck is that? Okay, it's here, it's not inside. Let me bring it here. Okay, I got this one, for example, right? I can see it here, right? And do all my, this is NASDAQ, this is my adjustment. But when I don't save it, I have to upload here, let's see the daily bar without overnight, weekly bar, monthly bar here. Yeah? So all my references are the same, are in sync with what I have here for NASDAQ. Yeah? This is the same thing. Daily bar, and let's go back to that, what it was. Let's check, you know, can you see this is kind of like a, you know, and still, I have to do all over again. I have to, I don't want that. I don't want to do that. This is easier just to have it here, even though I may not trade rules, for example, or I may not trade the Dow. Same thing for SPY. The SPY, I think the biggest advantage the SPY has is, you know, I can see a constant. This is a better chart for continuity. If I want to see continuity, let me erase what list, cancel light extension, You know, to see continuity in the years. Then if I want to check, this is 7, right? Let's change this to, no, let's leave it there in SPY. If I want to see continuation here, come on. If I want to see another ETFs, I can see QQQ, for example, for NASDAQ, which is basically the same, right? You can use that. Now for trading, it's a different look here. The same thing monthly, weekly, daily with volume here, and this is the intraday. This is 10 minutes chart here, and this is 30 minutes chart. Okay, let's keep watching this. How far it goes to, how close it comes to this low, and if the next one takes this low off. Okay, now I have another set of charts. This is all my charts that are flexible grids. Got another ones that are just charts. And I said here I have, for example, some sectors, ETFs. Basically, what the ETFs that are core for the S&P, all the ones that belong to S&P. You have technology, health, industrials, raw materials, utilities, and blah, financials, and stuff. I can add here let's add, for example, if I want to add volume here for equities, let's add subparagraph volume. Let's have financials here. What is utilities? Here. Utilities here. Futures. Equities. Show volume, for example. Okay, look at that. You can see some utilities has been receiving constant inflow of money. This has been rather low, right? Rather low here. It's coming back. There's some rotation here. Where this money is coming from, let's figure out. Let's find out. Real estate. No, but it's not just this, right? You got to check bonds, you have to check metals, you have to check gold, all that kind of things, right? Let's save this now that I put those little things. Save grid. Save it. Okay. Right. The next thing I have big tech here. All the Macs plus Nvidia. What's up? I need to add volume here. Next thing, the intraday for those techs. Monthly, weekly, daily. The same thing that I have, but this time this is for stocks. This is more detail on SPY. Alright, I can get rid of these ones. AI plays, and this is always changing, always evolving. We have some GCI actually. TNX. 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 This will be TYX, CGI. This has, I need to update this. Save as. Save. Okay. I'm watching what's happening to the market. My chart for volume is here as well. I can get rid of those, but I just have a small one. When I trade options, I place it here. Right now, this one is a very old one. Every time I use another one, I update this. The options 2, I got a bar. This can, I can get rid of this thing, and as I said, this one. And on all these charts, I can upload any of these stocks, indices, or ETFs. And this is used to study. The idea, and this is what trading is about, right? Did the market come down here? Oh, no, not yet. While I do this, or this part, mainly during regular trading hours, that's not all the job. That's not all the job. There is a lot of job that is a lot of effort that this job requires. And all the time, what I have in my, mostly I have in my screen is this configuration here. I have almost all the time in display, where I can see I have the quick chart on toss, and I have here volume, nice volume here. I can change my indices here. I'm watching, for example, ES, so I can see what's going on in the other ones, and all these watch lists as well for the same configuration. On top of that, Trader TV. Most of the time, I mean, depending, right? Depending on the day. Today, for example, I had this open. I have detached. I'm not interested in that anymore. But if not, I may have it here, right? I usually use a mute. Next week, this is going to be in full display, I think, for most of the week, because it gives me an idea what's going on, what the street is thinking, right? What the talking heads are saying. Check this out. What is this? Oh, this is Meta. Meta is checking the 100 moving average here. Oh, it's moving 100. Who cares about that? All right. Again, you have any questions or comments? The action is to the downside now. We have an action to the downside in a market that is going higher. Pay attention. The market is going higher, and the current action is to the downside. Look at what this market is doing in the daily time frame. 2 days trending higher, making all-time highs. The weekly breaking out of this 1, 2, 3, 4, 5 week range. Now remember, we have 5 day breakout. Now we have a 5 week breakout. Okay, this high here is important. It is important reference actually. This high up here, this one up here could be. I don't care about this. Let's get rid of this one. Let's get. Oh, come on. Yeah, let's get rid of this one as well. No, not that one. I'm going to move this one up here now, because we have an all-time high that was made in the overnight session. Okay. All right. Now I see some weakness in the upper side. There might be something coming out of this. Let me place something here. Okay. Okay, that has to be corrected. Never mind. I guess I'm looking for something here. That's not good. That's not good, man. At all. This in days like this daily histogram is going to be sitting there all by itself. The accumulation. This will be interesting to see if to check if there's some big blocks here coming. I don't think so, because they got what they wanted. Again, I got another trade here. I got late to the party here. It should have been when the market was attempting to close this gap. Remember, it opened and it pretty much sold from the opening. But the next thing we observed, there was no volume coming. There just wasn't. That could have been something there. And if I wait for confirmation, if I got a confirmation, the trade is worthless, because what happened is I'm too late to the party. If I do that, as simple as that. Oh. I saw some charts. I saw something like this. This is how you divide your time when trading. This is the total time on the trading. This time, this part is trading, right? What people call trading. But this is what most people call trading, okay? Right? The actual fact to be selling and buying, right? And all of this part here, and all of this part here is, you guess it? Waiting. Yeah. So the act of trading is not just this. Yeah. The act of trading is the whole thing. 95% of your time, sometimes more, is spent in this, in the waiting. And you don't just wait. You don't sit there and do nothing. Right? You're observing the market. It's hard. With time, I come to the realization that even I'm tired, like I am right now, just leave, man. Stand up. The market's not going to go anywhere. Go up, take a walk, rest, take a nap. Make yourself a nice breakfast, cook, walk the dog, do something. You don't have to stick to this market all day long. Especially if you find yourself looking for trades or waiting for something to happen, especially on when you're feeling those kind of things, those kind of emotions, that you're going to miss the trade. That's FOMO. That's FOMO. FOMO is not only the general understanding is, by people is FOMO. Oh, the market is ripping to the upside. The market is crashing, is puking red. And I have to get short. I have to go long. That's not FOMO. Or not only FOMO. That's not the only thing. Right? FOMO have many ways. We may not even know. And that is the danger. That is the danger of FOMO. Sometimes we don't even know that we are having FOMO. The ignorance can kill. It's very can hurt as well. Knowing, for example, or not knowing the risk we are taking when we get into a position is high when we don't know it, when we think it is one way but actually it's another way, right? And I have known people, in my case, in my personal experience, when I explain to them the risks of trading, or the risk that I could have seen they have been taken without even knowing, they got better disappointed, right? And I sometimes give them a little, what I could, based on what I know as well, some guidance of what we need to see, what we need to watch, what we need to monitor, what kind of job we need to do, right? And it is overwhelming. It can be very overwhelming. They come to the realization, man, this job is hard. Right? And sometimes the first reaction is, man, what am I doing? I'm not doing nothing here. I feel so bad. Notice how contradicting those thoughts are, right? Because before you knew, you were just taking risks like crazy. Now that you know a little bit more, or now that you know better, you are actually in a better position than you were before. But the way how you think, you don't have an opportunity, but you are actually improving. It's very, this business is very counterintuitive. Very, very counterintuitive. This kind of job doesn't come natural to humans, to we humans. I am going to leave these charts. I'm going to take a small break. If you have any questions or comments, just let me know. Just put it out there. I did something here. I did something here in NASA. I'm not proud of that. Right. I have started to see. This is in range. We have a range, right? Yeah, I have a range. We don't have a good low here. We don't have a good. We have a bad low. The ES also have a bad low. So that's why I consider the risk here in the long side is higher. But that is what the market is doing, right? That is what the market is doing. I say I was going to buy dips or when the market trades or comes below value, for example. Notice how value has been rising. It was here, it's going higher and higher, and now it's right at the opening. And we have excess in the upper side. And when I saw this movement coming in Nasdaq, man, this is inside range. Notice what happened here. This is the opening. Whites. There's no volume here, right? And I saw this area here being taken out. Okay, probably this market is targeting this one here, and I get long somewhere in here, or somewhere in here, with only half of the position, planning to add if I see development. But I decided to get out here when I started to see whites again. So the same thing that I see here, the same thing is happening again. This market can't take this high because that's the direction of today. So that's the mood. That is what the market is doing today, at the end of the week, Friday, right? And we might see some development here. And actually the same kind of rotation, we may see that developing higher. Will that happen? I don't know. Well, I don't know. But this is something I did not like it. If I saw maybe some reds coming here, especially when it's getting closer to the end, that is something. Another reason that I got this trade also is the development was happening in the last 7 minutes of the period, right? It's pointing higher. Previous period has been taken out, so we have a rotational day. Definitely, that's what we have here. Now, the next thing for this market, coming back to the ES, and I made something here by accident. I intended to get the long here, but I got long here instead. Right? This is a mistake also. I want to see if this market start to developing a distribution and actually building value higher. Right? Current low, well, again, this is this high here. This one is this low here. Right? This is what we have below, but who cares about that if the market is doing one thing? Let's trade what the market is doing. Let's trade the market we had in front of us, and always quantifying risk. Okay. All right. I'm going to call it a day. I have placed 2 trades here. I wish I can stay here. POC is pretty much the same on the profile. This is not looking. It's very risky here. It's very risky. Be careful. Okay, I wish you a wonderful rest of the day and have a great weekend. Bye bye.